the UK for tax reasons. Henderson said they could decide as early as today that they intend to re-domicile to Ireland. Brit CEO Dane Doté, reporting a slump in first-half profits yesterday, said that Brit is, quote, actively looking at changing its tax domicile. The insurer has hired Ernst & Young to advise it on its plans to leave the UK. Doté said, quote, the consideration that we are definitely staying in England is not as strong as it used to be. We need more certainty from the UK government on how it intends to deal with profits companies make abroad and other similar issues. Yesterday, Brit reported a 53% slump in its first-half profits, down to £49.9 million, which it's blamed on lower investment returns caused by global volatility. And yesterday in New York at the Rainbow Room in Rockefeller Center, Guy Carpenter received Reaction Magazine's Best Global Casualty Liability Broker for '08. According to Peter Zaffino, the president of Carpenter, in today's challenging environment, we work hard to deliver value and service to our clients. The Reaction's Global Award is a peer-nominated awards program designed to recognize corporate and individual achievers across the reinsurance market. Reaction polled more than 4,800 risk managers, brokers, and reinsurance managers to determine which firms and industry initiative leaders are achieving exceptional performance. So congratulations to Carpenter. They've certainly had a tough couple of years. Dow Jones Industrial Average is up about 140 points. There was some relatively good economic news this morning. The U.S. GDP for last month rose a little bit higher than expected. Now we'll go to a word from our sponsors.
Global warming. Some say irreversible consequences are 30 years away. 30 years? That won't affect me.
Together, New Yorkers can fight global warming, right now, before it's too late.
From prehistoric time to today, man's progress has been marked by his ability to fashion tools and use them to his advantage. From early humans making tools from stone, man evolved and was soon trading with other men. Money evolved, and tools such as the abacus to handle complex money transactions were developed. By the end of the 19th century, machines, such as the cash register, began to appear. 100 years later, we have even better computer-driven machines which track stock, change prices, and automatically reorder. Meanwhile, the reinsurance industry has failed to embrace man's drive for progress. The reinsurance industry today would be as familiar to practitioners from the 1800s as it is to modern underwriters. An underwriter or broker from 1800 would settle nicely into today's business. That is, until now. For the reinsurance industry, pivot point changes everything. Soon it will be understood that the period before pivot point was as dark as the caveman period was before the abacus. Come and see for yourself if you don't believe. After a demonstration, you will understand what is possible.
The bond insurer MBIA has agreed to stand behind $184 billion in municipal bonds that are currently guaranteed by a financial guarantee insurance company. That's a much smaller bond insurer whose future remains uncertain. By effectively placing a safety net under the municipal bond guarantees that FGIC has written, MBIA gives FGIC breathing space to sort out other contracts tied to problematic mortgage securities. Under the reinsurance agreement, which was brokered by the New York State Insurance Department and Superintendent Eric Dinello, MBIA will receive $741 million right now, which represents 79% of the unearned premiums on FGIC's municipal bond guarantee contracts. Cities, hospitals, schools, and other municipalities usually pay for bond guarantees up front. However, insurers recognize the premiums over the life of the guarantee contract. MBIA will give the remaining 21% of the unearned premium, or about $197 million, back to FGIC in the form of a ceding commission. FGIC will use that cash to settle claims or pay off other obligations. FGIC's financial rating, which was formerly AAA, was downgraded to junk earlier this year. On Wednesday, the FGIC said it would also pay $200 million to French investment bank Callion to settle a contract tied to $1.87 billion in troubled securities. Yesterday, the New York Superintendent Dinello said FGIC had shopped its municipal bond portfolio to other bond insurers, including the AAA-rated Berkshire Hathaway Assurance Corporation. However, Berkshire was only willing to take on the exposures if FGIC paid it about $500 million on top of the unearned premiums. MBIA was effectively, quote, willing to charge a lower premium to offer the business, said Dinello, adding, quote, this is a good opportunity for them given that they are not writing much additional new business. Under the deal, FGIC's municipal bond policyholders will be able to submit claims directly to MBIA in a cut-through reinsurance agreement. I'm going to refrain from comment on that one. Other economic news from France: the third and fourth largest banks in France reported slumping results attributed to the credit crunch this morning, with Crédit Agricole revealing a 94% profit drop and Natixis swinging to a loss of about $1.5 billion US. Natixis said it swung to a bigger than expected net loss of about $1.49 billion US in the second quarter, this from a profit in the same period of $1.5 billion a year earlier. The credit crisis led to write-downs of about 1.5 billion euros in that period, in line with charges that the bank announced in July when it said it would need to raise 3.7 billion euros of fresh capital. Shares in Natixis dropped about 8% in midday Paris trading. They're down about 60% since the beginning of this year. Also this morning, Crédit Agricole said its second quarter net profit dropped 94%, down to 76 million euros. The result was way below the 126 million euros that analysts were expecting. However, shares in the group rallied 6% as it reported a strong capital base and some progress in cutting expenses. The sharp drop in profit was largely due to around 1.1 billion euros of write-downs booked in the second quarter. On the other side of the globe, the Bank of China, the smallest of China's big four state-run banks, this morning reported a better than expected 43% jump in first half net profit from a year earlier. However, the bank president, Li Lui, said in a statement he expects economic uncertainties and financial risks to increase in the second half of the year, and that they will put considerable pressure on the bank's operations. Mr. Li did not elaborate on the risks, but analysts have said continued volatility in global equities and a slowdown in corporate earnings growth may worsen Chinese banks' asset quality and hurt their earnings. The bank's net profit for the 6 months ending June 30 rose to 42 billion won, up from 29 billion won a year earlier. The New York Attorney General Andrew Cuomo said yesterday that he is probing the relationship between Fidelity Investments and Goldman Sachs, this in connection with Fidelity's sale of auction-rate securities. Cuomo previously disclosed interest in looking into how Fidelity and other brokers sold auction-rate debt, which are investments long marketed as cash alternatives, but have been nearly impossible to sell for most of this year because of the credit crunch. More recently, Cuomo has begun taking a closer look at whether Fidelity marketed Goldman underwritten auction-rate debt because it received other services from Goldman, giving it an incentive to sell those securities to clients. The state has focused on the relationship after finding that most of the auction-rate securities sold by Fidelity were underwritten by Goldman. Cuomo's office confirmed the direction of the probe, but declined to comment on other details. Goldman was the #1 5 underwriter of auction-rate municipal bonds since 2005, and a spokesperson declined to comment on this probe. The Peoria, Illinois-based Caterpillar company will invest just north of $100 million US to triple production capacity at its Shandong, China plant over the next 3 years. It will also spend $20 million to build the first phase of a research and development center in Wuxi, China. This according to its CEO Jim Owens this morning. The expansion of Shandong Machinery Company, which manufactures wheel loaders, will begin in 2009. Caterpillar did not specify the current or increased production capacity. The U.S.-based company purchased